Okay, so I actually went through and revamped this whole presentation today. So it should be interesting, but it has a lot more of the new material and that has been put through KWRI. So at any point in time, if you guys have any questions, please feel free and just speak up and we'll just go from there. Or if I'm saying something that potentially you don't understand what the color way of saying it is, please just let me know. That's not a problem. Okay, so I'm gonna go ahead and share my screen. Okay, can everybody see my screen? Okay, so this is Know Your Numbers. So this class has really evolved within the last year because Keller Williams has evolved in the last year. I used to go over a lot of reports, but now what we're doing is focusing more back on the agent and budgeting and making sure that you're setting your business up for success. I've even went through and created like an Excel file profit and loss statement that I'm more than happy to share with you, and you can use that in your business as well. So the first thing in this is this quote from Gary Keller: when the desire to do more comes from a place that's bigger than ourselves, anything is possible. And that's something that was just recently featured within our team meeting slides. So the first question is, do you know your numbers? And I reference the MREA, the Millionaire Real Estate Agent book, a lot. If you don't have a copy of it, you can get it through one of the executive team for $15. Or you can order the spiral bound version from Keller Inc. and it has more tabs and it's easier to highlight and read if that's something you're looking at. And I think it's probably closer to 40. So when I asked, do you know your numbers? The main things I'm asking for are the 8 goal categories. And so within these, this is listed on page 109 of the MREA. And it's the 8 goal categories of leads generated, listings, contracts written, contracts closed, the money you're making, the people that you have in your business, the system and tools that you have, and your personal education. So when we think of these goals, we think of goals versus actual. So whenever you're talking to a lot of agents, most of them can easily tell you where they're at currently, month to date, year to date, and they know where they actually need to be in order to hit their goals. And Keller Williams actually has a goal setting system through Command that you can go in and set your goals in. And we'll work on that towards the end of the class as well. These are also called the 4 conversations. So from an agent perspective, it's appointments, listing agreements or buyer's agreements signed, under contracts, and closings. And so you're able to track your profit through that way. So whenever you set your goals, it'll break it down to show you, in order to make this amount of money, GCI, you have to go on this many appointments, to sign this many agreements, have this many go under contract and this many under closings, and then what is your profit actually going to be from that business? So then we talk about managing expenses, which is something that everyone loves to talk about. So the 3 key areas of your budget, and this is on page, let me minimize this, 152 through 157 of the MREA. So I always like to follow along within my book just to make sure I'm having everything together. So the 3 key areas, the first one is lead with revenue and not expenses. So it's easy, especially right before this new normal we're facing, was you see this shiny new project and you hear it's going to help you in your business, and it's easy just to say, okay, I have money now, let's go ahead and let's get this thing to see if it will generate more business, compared to leading with the revenue that you have coming in and not just picking the nice shiny objects. The next one is play red light versus green light. So red light and green light. So where you're at in your budget as you start tracking it along, if you see that you have money in your business account that you're willing to spend, then you're able to go ahead and use that. And that's kind of the green light. If you're kind of at your bottom line profit, then that would kind of be the red light of where you're stopping and you're not purchasing moving forward. So as long as you're getting the results as when you're spending the money and you have a good rate of return and you're tracking that, then that's always a wise business investment. And your biggest 2 expenses in any business is always going to be, especially in real estate, is your lead generation and salaries. Because if you want a talented person, sometimes you do have to pay that talent price tag in order to help them grow your business. And same way with lead generation. Whenever you have money and you're putting it back into your business, it should help you generate more business in that aspect of it. And then once you have a budget, make sure you stick to it. That's the hardest thing to do, especially, personal and professional, is sticking to your budget. Now the MREA actually has this outline for you of projected GCI, what your cost of sales would be, gross profit, expenses, and net income. And that diagram is actually on page 157 of the MREA. This is based off of the current MREA, and they are working on a second edition of the book. And I know these percentages will change a little bit, but for right now, this is what we're going to reference to. So GCI is gross commission income. Your cost of sales is the cost of doing business. So if I didn't produce, I wouldn't have that expense. So for instance, whenever I produce, I pay in company dollar and royalty. If I wasn't producing, I wouldn't have to pay in those things. So that's technically not an expense unless I produce. And then you have your gross profit and your expenses, which is more of your fixed expenses, monthly expenses, board dues, office rent, Keller Williams fees, and then here's your net income. And then it breaks it out by each of the details of what those expenses should be. So if you are a $6,180,000 in GCI producer, these are the guidelines you should follow in order to stay within the MREA. So previously, at large events like Mega Camp and Family Reunion, we would have a lot of these top agents on, and they would be telling Gary and the rest of the crowd what they were doing in order to make all of this money. Well, come to find out, they were making all this money, but yet their expenses weren't in line with the MREA, and they were hardly making any profit. And so what Gary recently has changed is, until you show him a profit and loss statement and it's within the lines set by the MREA, you're not allowed to go on stage. It has to be approved by Gary Keller before you're able to share your story with the rest of the agents. So I thought that was super cool that Gary Keller is making sure that he protects our agents' businesses and they are running a profitable business. And like I said, this is on page 157 of the MREA if you're wanting a closer look at that. So within those guidelines, it breaks it down a little bit more from that budget model. So if you're on a team, this is how the three main categories should look. So 30% will go to your cost of sales, 30% is expenses, 40% is net income. If you're an individual, then it would be 30% go to expenses and 70% net income. And you're able to break it out that way. So I will show you the profit and loss statement that I have created. Let's see if it opens up. Okay, actually need to open it up in a new tab. Okay, what are we doing here? So this is an Excel profit and loss sheet that I actually created just to share with some of the agents. So if you guys want this, I can easily email it over to you. So it breaks it down by your income, and I have it broken down by listing gross commission income and sales or buy side gross commission income, and then your referral. So that's kind of an untapped revenue source, especially since our average price point is so low compared to most major cities. If you do build a referral network and you're able to get some of the referrals coming in from the coast, normally it's bigger than a check you would make here. So it's pretty interesting. So right here, you would be able to enter in all this information. So each month you would go in and you would list how much GCI you made for each of the months. It would calculate your total income. It would also calculate for the month, and then it would also calculate year to date over here on the left-hand side. Then we have our cost of sales. So again, this is the cost of producing. So I wouldn't have any of these costs if I wasn't producing. So company dollar, which is what you pay into the market center. And then you have your royalty, which you pay to KWRI. So as you produce, company dollar and royalty comes out of your check until you meet the criteria within a rolling 12 months, and you potentially be capped on both. If you were on a team and you had a listing specialist, you paid some of that out to someone, or a buyer specialist, so you pay to cut that out, that's where you put it here. And then if you paid out any referrals. So I know some of our agents, they are in a referral-based program like Dave Ramsey or Op City, and that's where you would pay out that money right there. So once you've entered all that information in, then it would calculate your gross profit. So let's say I made $20,000 in GCI this month, and I paid $57.50 out to the market center and $2,500 to royalty. So this would be my cost of sale, and this would be my gross profit. So if I did not have any of these expenses and I was capped, then it would all be gross profit. But again, gross is before your fixed expenses. So as we move down, I've listed these line items actually out of the MREA. And if there's anything else that you potentially pay for, you can, again, it's customizable and you can add whatever you would like. So if you don't have a CPA or an accountant, I highly recommend finding one of those, especially, you know, in the industry, a 1099 person you are, sometimes you're not always up to date on the tax laws and what you can deduct and how much you can deduct. So if you don't have one of those, I would strongly recommend finding one. We have advertising, internet, car, banking, dues and education, equipment rental, lead generation, meals, office supplies, photography, postage, rent, taxes, travel, lodging. So all of these line items are listed here. So if my dues and education, if I pay my $50 dues to Keller Williams, I would put those there for the month. And then I would have, actually it'd be 95 because I pay my 45 to the, I pay my 45 to the board. So that would be my monthly dues. If I don't have any other expenses like signs, postage, anything like that, then that's all my expenses. So as you can see, then it takes your gross profit minus your expenses, and then here's your business profit. Here's some other income if you would like to track it. If you earn any interest in a bank account that you may have for your business, profit share, what other income you want to count, you can include it there. And then down below is your taxes. This is the biggest thing that agents forget to take out of their check. So being a real estate agent, you are a 1099 employee, which means you're not taxed by the market center. So whenever you receive your closing check, you want to make sure that you do put a percentage aside in a tax account. So when tax time does come, you're not having to cough up $10,000 to $15,000 in one single check. I've seen it happen to multiple agents, and it's not a fun feeling for them to have, or an emotional time, that's for sure. So just go ahead and prepare. I know some agents, they pay their taxes quarterly, or some pay it yearly. It's whatever you prefer. But again, if you find the right CPA or accountant, they can definitely help you out with that. And then right down here is your net income. So as you go along the year, you should be able to see what your net income for the whole year is right over here on the right-hand side. So if you want this sheet, feel free to send me an email, and I'd be happy to send it over to you. So next, whenever you're going through your expenses, so the Market Center, we transmit our financial data to KWRI every month. Because of profit share, that's why we have to do it. We have to close our books out. So every month I am looking line by line at our credit card statement, or any expenses that we have paid through, and asking myself, you know, are we getting a return on investment on this? Do we absolutely need this for our business? Or if we didn't, could we do without it, or can I get it lower down? So everything that you're paying for, that's something you should always say is, am I getting my return on investment? If you can't say 100% no, then I would start looking at other options that you potentially could confidently say yes, or monitor it for 30, 60, 90 days to see if you're still feeling that way. The biggest thing we see a lot of the time is agents start signing up, or they have a credit card and they get these, you know, different charges here and there, and they don't realize that $5 here, $15 here a month will really add up whenever you look at the sum of like 30 different softwares that you're paying for. So those are 3 questions to always ask yourself as you're going through and you're looking at your expenses. Another thing is renegotiate contracts. You know, a lot of the time, especially marketing, a lot of agents pair up with a lender, and they're able to get a lot of their marketing material paid for. Especially being a new agent, the best thing you can do is call a lot of the title companies or mortgage lenders and say, hey, I'm a new agent here. I would love to know how potentially partnering with you could, I can serve my clients better. And so you're able to meet them, and there may be a time for you to do that. The Market Center, we're always looking at our contracts. We renegotiated our cleaning contract last year. We'll have a new rent contract whenever we moved into the new building. Tech contracts, that's why we partnered with Centric, because we found that they provide more value than we could as far as support in that way. And so just always looking at your expenses and making sure that they are giving you that good return. So this is my favorite part for your depositing your commission checks. So a lot of agents, what they're doing is they are just depositing their commission checks into their personal accounts. And they're not even setting aside anything for taxes, which again makes it really hard tax season whenever you haven't set any money aside. So what I recommend our agents do is they have 3 different accounts. And a lot of these you can put at separate banks, especially that tax account, if you even feel like you'd be tempted into getting that money out. So even though your commission check could be in your name, you could open up a business account and deposit that check into there. If you're starting an LLC, that'd be a great way. If you want your commission checks to be in the LLC name, you will have to go through and get a new license with the MRAC, a professional corporation license, and that does take a little bit more time. But if you don't want to go through that work, you can just take your checks that are made out in your name and deposit it into your business account. And then out of your business account, you will take a portion of that, so normally around 30% of your commission check, into your tax account and let it sit there until you're ready to pay taxes. And then a portion of that into your personal account to pay yourself a salary. Now, you don't have to pay yourself the whole check because you can leave some in that business account, and that's where you can set up your dues to come out of and any other business expenses. And so you're running it like a true business instead of mixing it with personal. A lot of the times agents, they put everything into the personal, and then it's hard for them to track what are they using specifically for their business versus their personal life. And again, I can't stress it enough, the taxes are a huge part that you have to make sure you're keeping track of. But through that way, you're actually running it like a business. And whenever we have a weird situation like this, and we're able to potentially get government money back, this is a great way to show that you're running a business and how to track how much money you're putting into your business account. So whenever the government came out with this plan, you're able to show them that. There was a stipulation that if you weren't running your business like a business and you were depositing it into your personal account and weren't able to show that, it made it a little bit harder to get those loan documents sent out to the government. So that's a big thing. And for the tax account, put it into a bank that you don't have checks to and you don't have a debit card. You'll literally have to go there, and all you can do is transfer money. And if you need money out, you have to physically go there, go inside, and write a deposit slip. That way it's less tempting. I know some people, they have a tax account in a bank that's way across town. That makes it super inconvenient for them to even have to go to if they ever need money out of there. And then here are some expense management videos through KW Connect that they have recently came out with. So a lot of them: get financially fit, renegotiating leases, learn to live on less, create smart habits and hold your money accountable, and build a moat around your fortress. These are some great videos that they've just come out with, and so you're able to find on KW Connect. So the next exercise is something that I really think would be beneficial for everyone to try at home. So how to cut your expenses. So you'll get your last 3 months of your profit and loss statement. If you don't have a profit and loss, get your bank and credit card statements and 3 different color highlighters. And so you'll go through and review your P&L line by line and highlight all of your C expenses. Now, C expenses are categorized at the top by being expenses the business does not need to be successful. And if you can easily say it's not helping your business out, cut it within the next 48 hours. Then you'll go through and you'll highlight all of your B expenses with a different color. And these are expenses that are nice to have and that you would prefer to keep. And if that's where you categorize them, cut these expenses within the next week. And then you'll use your last color of highlighter to highlight all of your A expenses. And those are expenses that are critical for the business to succeed. And these expenses should give you a return on your investment. Now, a lot of the times it's easy to sign up for all these programs and not really track what kind of return you are getting. I mean, the market centers, definitely, we had this service called Broker Kit before Command came out, and that was our CRM tool of tracking all of our agents and those conversations. And we never really tracked how well that program benefited our office. And especially now that KW has that for us, we were able to cut it right away. And then once you have that plan in place and you have these expenses that are labeled A, B, and C, I would share them with either a accountability partner or your accountant and say, okay, hold me to these standards. These are A expenses that I need to have return on investment, and have a conversation of what that return on investment looks like, because everybody's different. I know some teams, they expect like a 6 times return on whatever investment they make. Or sometimes it's 2 times, whatever works for you. And then what are your B expenses that you would like to have or you prefer to keep, but do you really need them? And the last one's, what do you not need at all, and you've just signed up for them. So I think that's a really beneficial exercise that you'll be able to do at home to really get on the right page. And then once you have those expenses really lined out, then that's where you can work on entering everything into your profit and loss with your budget and just making sure that you're holding yourself accountable to that. Okay, so let me open up KW command. Okay. So this is your home screen on KW command. You are able to, oh, is something down? Oh, it looks like the goals section is down. That's great. Well, yep, okay, and it just worked 10 minutes ago, so that's crazy. So through here, you're able to go through and set your goals on command. So right down below here, we'll actually have a tab that says goals versus actuals, and you're able to click on that and enter in what kind of GCI you're hoping to make. What are your expenses for the year? What are your cost of sale expenses? And then you're able to break out what percentage of buyers or sellers are you working with. So an individual agent, normally it's 50-50 because you'll take a buyer and you'll take a listing. You'll take the business that comes to you. And then you're able to enter all that in, and it will work backwards and say, okay, if you want to make 100,000 in GCI, this is how many closings you have to have, and this is the dollar amount you should be striving for. So you may have to increase your average sales price in order to hit that some months. This is how many contracts you need to have, how many buyers or listing agreements you need to have signed, and how many appointments you need to go on. So that's a great tool to work your way backwards. So every day you're able to say, okay, have I made my 10 appointments for the week or 3 appointments for the week? Have I got those agreements signed? What does my under contracts and closings look like? And is my profit going to hit that mark? So yeah, sorry that's not working. That was very odd. But other than that, I think that's all that I really have for this class. Let's see, I think, yeah. So do you guys have any questions right now that I could answer?
I would just, I can reinforce what, what you were saying if you want, as far as managing the your expenses and your P&L. I did the thing that most agents do, and I didn't keep all of that stuff organized in the couple of years that I was in business. Like I had like my loose stuff, but I didn't actually have a P&L that I managed, and I just started that up this year. And it is amazing how much that has done for me in terms of seeing where my money goes and how it's broken down. And I actually you can use the MREA chart of accounts and put it directly into a program like QuickBooks, which is what I did. And then now within that, I can actually run a report on percentages based on all of those expense categories that I put in. So I can actually see what am I spending on meals and entertainment, on closing gifts, on whatever categories I built for myself. And it was amazing that I was spending more money in some places than I realized, and I was not spending enough money in some other places.
Yeah. Yeah, no, that's so true. I mean, and QuickBooks, yeah, QuickBooks is a great program. Like you said, you're able to download those chart accounts and put it right in there, and you can run a lot of reports, and it's fairly inexpensive.
It's $25 a month. They
Yeah.
use specials. I got it for like $7 a month for the first quarter.
Mm-hmm.
Um, and the cool thing about it is I add in my CPA, and he can go in directly and pull all the reports that he needs to, and tell me if I need to rearrange something. So when I actually meet with him, it makes it so much easier. And I have spent like hours and hours and hours and hours reconciling all this stuff. I'm still not done reconciling everything from 2018, which is why I was asking you about that report, Rachel. So I wish that I had someone telling me, 3 years ago, hey, get your crap together.
Mm-hmm.
Because
Yeah, it's so true.
it's a mess if you don't. Yeah.
Yeah. And that, I mean, the market center every month, that's what we have to do. We have to go through and we have to balance our bank accounts. We have 6 different bank accounts, and then we have to, go through line by line through all the credit cards. And every month after I book them and I have my financial report, I go to Travis and Dan and we go line by line, and they say, okay, tell me what we had in this specific line item this month. And I would go through and say, okay, $200 to this, $100 here. And I will tell them specifically what is where, because it's an accountability piece that I'm not just, allowing things to be purchased for no reason. And I'm spending the investors' money and profit share and all of that wisely. And so that's an accountability piece for you and your accountant, saying, okay, how am I making sure that I'm building a business for my family? Yeah.
Absolutely.
Awesome. Does anyone else have any questions or comments?
No, I agree with Brian, because it's nice that even if you don't do QuickBooks and you just have the P&L chart, you can look monthly and see where you're at.
Mm-hmm.
Because you don't want to wait till the end of the year and find out you should have made adjustments 6 months earlier.
Yeah.
Which is what, I used to work for an accountant, and at tax time, we would literally get agents coming in with boxes full of receipts and just saying, here you go. And they got charged by the hour for us to sort them out. But, they had no idea, not a clue, whether they'd made money, lost money. And I don't know how you live like that. I guess they just knew they were putting checks in their account, so they thought all was well, but I don't know. So, yeah.
Yeah, no, that's huge. And what do you guys use to track mileage? I've heard Hurdler before, but is there any other apps that you guys use to track your mileage?
I have pencil and paper.
Yeah.
Yeah, I actually use Google. Like, I have all the permissions on in Google, and it like keeps track of everywhere I was at, and links it with my calendar. So what's nice about that is I can even see, as long as my calendar is what it's supposed to be, I can say, okay, that trip was for this showing for that client, or that was for this listing.
Mm-hmm.
And so if I were to get audited, I can actually have a record. I can go back and look and tell them exactly where I was and why, which was good. So
that's interesting. I didn't know you could use that through Google. So yeah, that's awesome. I learned that today. Wow.
If now you have to basically allow them to, take over your life, So.
Yeah. You're signing kind of a lot over when you say, okay, you can track me, but
they have my data, you know what I mean? Like,
yeah.
but that's just what works for me.
Let's face it, everybody has our data.
Yeah, at this point, you're not safe from anyone. So my Alexa is listening to me right now. So
we just assume everybody knows everything nowadays. It's just easier.
Yeah. Wow. Okay. Well, anybody else? Dana, do you have anything? Okay. Awesome. Well, thank you guys so much for jumping on this call. And if you need anything moving forward, please feel free to reach out to me, and I'm here to help.
Thanks, Rachel.
Bye, guys.
I already sent you a few emails.
Perfect. Okay.
Thanks.